There we go. Great. Now. All right. So I have we're streaming on nine different channels, but I have six screens in front of me. Which means I have a lot of questions coming in all the time. So I do my best to get to each and every individual question. So please ask the question. Just number one. Number two, if you can't be kind and courteous, please go somewhere else. Okay, we're adults here. BH. Thank you. We're all adults here. Let's try to keep it civil. Let's try to help one another out. Okay? If you don't agree with something, fine. You don't agree. Don't get rude. Don't get insulting. And please, who just picked ULTY? Gotti, come on. Do some research on ULTY. Then come ask me about what I think about it. All right, getting back to where we were. All right. And like I said, rule number five, we are going to take a look at the numbers. What am I buying it for? What am I selling? Is my profit? Is it more than 1%? I'm looking for 1% a week. Okay, simple, safe, consistent 1% per week. It doesn't sound like a lot of money. It should be relatively easy. Actually, it is. Getting 1% every week is easy. But it's time consuming. It takes a whopping 5 to 10 minutes a day. Terribly sorry. But here's a funny statistic I learned. Most adults spend more time planning a weekend barbecue than they do on their personal finances. And then they get to the retirement and he says, how come I don't have more money? Ryan, thank you for that, Ryan. That being said, keep in mind what I'm looking for. Simple, safe, consistent 1% a week. 1% a week is over 50% per year. And I'm perfectly okay getting 50% per year. Whatever money you think I have, divide it in half. That's what I bring in on a yearly basis. Okay. So what do we have first tonight? We have DFLI. I have no idea what that is. But we'll take a gander at it. All right. We're here. What do we have here? Let's go. PNC. Oh, take a look at PNC in a second. First on the list is going to be DFLI. I never heard of it before. DFLI. Dragonfly Energy. Hell no. That was quick, wasn't it? No. Do you know why? Look it. Has one option. That's it. What the hell am I going to do with it? And then look at this. It was below $1 just a couple of months ago. So explain to me in a manner which I'll understand. A company that's less than $1 a couple of weeks ago. How can that possibly have two decades of increased profits? It's a no right off the top. No. All right. I ordered me some more cables. I got me some more cameras. So we're going to be doing a couple more. So by next week, I think we'll be up to like 13 channels. That's a lot. Well, the only reason why I want to get the word out. Okay, we're also going to do a podcast, live podcast. And then I want to get interaction. With a telephone, so I can actually talk to people. People can ask me questions live. I think that's a cool idea. James, good evening. I got a serious dilemma tonight. Trade architect again. How are you today? At one time, Coca-Cola is the most well-known name in the world. Yep, I believe that. Do I watch the Chicago Bears Monday Night Football or tune in to Trader? I don't know. Chicago Bears has been the same since 84. Since McMahon left and the refrigerator's gone. Invest in real estate. Hey, Johnny wants us to invest in real estate. I got a problem with real estate. I've never seen real estate that has no inventory, no overhead, no employees, 50% return per year consistently. And the overhead part. And the aggravation. No thanks. I've done real estate before. Okay. I had a manufacturing company when I got out of SERP, and I started my business. Great. I started manufacturing something nobody ever did. Okay, great. Making all this money. What do I do with it? I put it into real estate. Yeah, it didn't work. Too much effort in real estate. And not the same amount of profit. I know a lot of real estate people. They say, hey, I'll be happy to get 7% return on my money. Yeah, that doesn't work for me. Mike, do you only do covered calls? Did you make well with Dollar General today? Okay, Mike, let's look at Dollar General. Because we know DFLI is not one we want. So where are we? Okay, where we go? DFLI, that's one right there. Alex, what's happening? Alex has DH is in the house. Jake, good evening, Karen. How are you doing? Colin, why don't you just do options and futures? Okay, Colin, I do options, and I did futures in the past. Futures are not as consistent as dividend stocks because futures come and go. Okay, every single year. I mean, look at this. You got a crop of corn. Okay. They've been doing that thousands of years. We know when to plant it. We know when to harvest it. We know what to do with it. Great. Well, what do you do in those times when there isn't any? Same thing with eggs. There's futures and eggs too. Same thing. Each one has its time when to trade it, when not to trade it. Stay away from it. It's just not as predictable and consistent. Call it. Okay. So I do options, but not futures anymore. I used to do them years ago. Why do we discuss different stocks when there is only infinite list that meets your target criteria? A finite list. Well, bring that. Think about it. Bring that. Let me explain. Okay, there's 10,570 companies. Fine. Wonderful. However, only about 300 meet my criteria. I don't know about you, but I cannot buy 300 shares every single week of 300 companies every single week. I only have 4 or 5 in each account. So 4 or 5, great. When it moves around, wonderful. I make my profit, and I move on to the next. It's like a revolving door. Okay, there's 365 days in a year. Okay, 12 months. 4 quarters. January, February, March. First quarter. April, May, June, second quarter. July, August, September, October, November, December, fourth quarter. So you get 300 companies paying a dividend once every 90 days. It's only 66 trading days in a month. I mean, in a quarter. That's it. 66 trading days. So how do you get 300 companies into 66 trading days? So there's more than enough to jump in, jump out every single week, after week. Okay, so bring that. I'm not really quite sure why that bothers you. Maria, pretty sure that like 3 to 4 days trading blowed up. Not quite sure what you mean by that. But okay. Okay. Stop talking so you can teach the class. Thank you, Maria. All right. So note to this one. Why do you? Okay, I already did that question. No more questions. Pappy. UAMY. What the hell is that? UAMY. United States Anatomy. What the hell is that? What the hell is that? Oh, hell no. Again. When you see a stock that's less than $1. Okay, last year, there's no possible way this thing can have 20 years of increased profits. Sorry, it doesn't happen that way. Next. Okay, nothing over here from the peanut gallery. All right. Greg, are you fearful of the chance of a major crash? Kilroy, how are you doing today? Nothing like being a buzzkill. You know that? Here's the thing. Kilroy. Whether you agree or not, whether you like to think it or not, okay, really doesn't have any effect on what's going to happen. There's a stock market crash every single decade. Every 10 years. Every 10 years there is a pullback, a reset, a crash, whatever you want to call it. But here's the thing. Okay. There's still companies that even back in the 1800s that are still in business today and are still increasing their profits year after year. Every 10 years there's a crash. Every 10 years. Is there one coming? Yeah, there's one coming. What are you going to do when it happens? I know what I'm going to do. I'm going to do the same thing I always do. Look for opportunities. Try not to get too deep into margins. I don't lose anything. So you have to balance what's right, what's coming, what certain things you just have no control over. So yeah, the market is going to crash eventually. But am I going to sit here holding my breath, waiting, or am I doing business as usual until it hops up? Glad you're feeling better. Not 100%, because I'm taking all this stuff from my throat, and you can hear it. It's not my voice already. I'm just not talking so much. All right. Bones of steel. You got only one stream, right? There's another account stealing your stream right now. Okay, bones of steel. I have nine streams. Okay. So this is streaming live on nine different platforms. Okay, so nobody. I don't know if someone's stealing it or not. I just hope the information gets out there. Why do we discuss different stuff? Yeah, we already did that question. Okay. User 1165. I created 1,000 revenue a month ARR. Half margin. Would options be better? Okay, number one, I have no idea who you are. I have no idea what you want to do. I have no idea. I know absolutely nothing. For me to give you advice would be doing disservice to you. If you want to have a conversation. Michelle, thank you for that, Michelle. If you want to have a conversation, DM me your number or go to the website and sign up. Time slot. We'll have a conversation. I guarantee you, I'm not going to sell you anything. I just want to have a conversation. I love talking to people. That's probably why my voice is going. I talk too damn much. Alrighty. BP, that's what we're here to do. All right, what else do we have here? Ooh, New Jersey wants to take a look at Mara. M-A-R-A. I love Mara. As a matter of fact, I actually have some. So I'm going to give you a run through how I do this. It's very simple. All right. You come up with a stock, and I'm going to show you the steps one at a time, and then you can probably do the same. It's really not that difficult. If you always keep in mind that what I'm about to show you was created specifically for my 9-year-old daughter when she was 9, 2008. She's 26 now. So it's a little different story. But here's the thing. At 9 years old, it had to be simple. Safe, consistent, all that. And she should be able to do it in less than 10 minutes. That's why it was called the 10-minute trader. Okay? Because before my daughter wanted to learn how to do it, I just shared my information on a different website that I had years ago. I don't do it anymore. Blogging since 2011. Wow. Anyway, so let's take a look at Mara. One step at a time. A, B, C, 1, 2, 3. It's really not that difficult. If you didn't know, the screen behind right here is live on YouTube. So if you cannot see these little tiny numbers here, you can probably go in the other room, pull up the big screen TV, put it on the big screen, and just sit there and watch it. That way that we see the numbers easy enough to look at me. Because the screen by itself. That's it. Just the screen is being broadcast on YouTube, and it is being recorded. So after we're done, which by the way, it is 9 because every night somebody says this is live. No, this is live at this moment in time. It is 9:25 p.m. 10/13/2025. Okay. So let's get rolling. First one we're going to look at tonight is going to be Mara. Remember. 1, 2, 3, ABC. It's always by the numbers. Always the same things over and over again. First thing I want to look at is the 1 year chart. It just pops right up. I'm looking for 5 things, and it takes me 2 to 3 seconds to find these. It's like where's Waldo? Ready? Let's find Waldo. Ready? 3 to 4 seconds. You guys. 2 to 3 for me. High, low, is it down, up? Wasn't that easy? 2 to 3 seconds. Now what am I looking for? Well, one, I want to know what high the year is. I want to know what low the year is. And then just by visualizing it, a year ago it was here. Now it's here. Okay, so it's higher now than it was last year. She jumped up, she came back up, down. She's right about here. Great. It's not the high of the year. Hell no, I don't buy anything at the high of the year. It's not the bottom of the year. Don't worry about that either. Somewhere in the middle. Okay, fine. Let's go to the next step. Okay. Next step. Remember rule 5? Make sure all the numbers work. Well, let me show you the numbers I'm looking for. The number I'm looking for is easy to see. Michelle, thank you, Michelle. It's easy to see. You know why? Let's check it out. 2024. It's there four times. That is the last trade of the day. So today, the last trade of the day was $20.24. President doesn't control the stock market. Big corps do. Not really, but kind. How many streams do you run? Nine, Bradley. Hey! What about his announcement of the new round of tariffs? And then changed his mind. Okay, it's his prerogative to change his mind if he wants to change his mind. And tariff, you want to avoid tariff? Simple. Hey, that's his name. H-E-Y. Hey, you want to avoid tariffs? Stop buying crap made elsewhere. Buy American-made stuff. Support your brothers, your aunts, your uncles, your cousins, the guy down the street. Even if you like them. Buy stuff made in America. Avoid tariffs that way. That was just an excuse. Okay. I'm not going to get into an argument about it. What about the $20 billion worth of stock that was liquidated the day before? I have no idea what you mean by that. Okay? And tariffs on our corporate taxes are I don't suck me into it. Okay. So once I take a look at the chart, I want a rough idea what it's doing, what it looks like it's doing, blah. See, she is definitely going up. What's going on right here? That's what we're kind of interested in. Before that, let's check out the numbers. 2024. Now, when I say simple strategy, okay, the easiest strategy there is just buying the stock. But if you buy the stock, guess what? You have to wait for it to move. Go up, down, do something. Well, not the way that I'm doing it. Because we are going to do, I'm going to show you what is called a covered call. One of the simplest, easiest strategies there is. Here's the thing about it. The stock doesn't have to move at all. I don't have to wait to know if I'm going to be profitable or not. So let's find out. This one fits. First thing, the number. 2024. Well, great. Now I'm going to look at the closest strike price, which is the price I'm going to sell it for. If I buy it here at 24, I'm going to sell it to someone else more than likely at the $20.50 point. Well, I'm buying it for 2024, selling 2050. And what am I collecting? I'm collecting 71 cents per share. That is the premium. So basically I'm buying the stock first thing in the morning, and then I'm turning around within 2 or 3 seconds because it's instantaneous. I buy the stock like a half a second later I sell the option. This way it allows me to sell it to someone else at a predetermined price. That's called the strike price. Say 19, 15, 20, 21, 21, so on and so forth. Well, the closest strike price to the purchase price is going to be $20.50. And the premium for that is 71 cents. Now, if you don't understand what covered call is, there are literally hundreds of videos explaining. Basically, it's very simple. I'm going to buy a stock. I'm going to turn around and sell it to someone else at a predetermined price. That's the strike price. At a predetermined date. That means they have until this day to do it. Well, that's called the expiration date. 17 October 25. That's this coming Friday. 24 October. That's next Friday. 31 October. That's 2 Fridays away. 3 Fridays, 4 Fridays, 5 Fridays, 6 Fridays, so on and so forth. Every single Friday is one of these expiring. So if I buy this stock at 2024, I can sell somebody the right to buy it from me every single week until one or two things happen. One, someone buys it from me, which is my target. My target 2050. Or I die, whichever comes first. Remember? Rule 1? Rule 1. Never buy something unless you plan to hold the rest of your life. Well, great. I have no intention of selling at a loss. Too. Never sell at a loss. It defeats the purpose. Stocks go up, go down. Uh-oh. Trade architect has a serious dilemma. Do I? Yeah, I'm not even going to do that. I made a lot of money because you guys panicked. So, yep. Warren Buffett has always taught this. Don't buy, sell out of emotion, but actual thought process. Well, that actually makes sense. It does. If you think about it. How do you start investing? Aaron, how are you start investing? You just make a decision. I'm going to start investing. Great. What's step one? Step one is mental thought in your head. I'm going to take a little bit of my money. I'm going to put it someplace, and it's going to grow. Well, great. What's the next question? The next question should be, what trading platform should I use? Well, that's going to be directly related to, how do I say this without being too condescending? Depends how smart you are. Do you want something simple and easy? Well, look at Robinhood or Webull is simple and easy. Robinhood is easy. Hugo Lina. Easy, absolutely. What did you think about today? Okay, Hugo Lina, believe it or not, I haven't even looked at the outcome for today. Seriously. I do my trades in the morning. I spend about an hour, maybe an hour and a half, because I have a lot of people that trade along with me. I have a morning trading group. Yes, it's a paid trading group. No, I'm not trying to sell you on it. It's for those people who want to take the next step. Okay? So free is free. Ask me a question, I'll give you the answer. If you want to watch over my shoulder and ask me questions while I'm doing it, that's not free. Because then you're interrupting my day. Yeah. All right. Anyway. But it is available. Anyway. So after that, this morning, I turned off my computer on all night until half hour ago. Then I haven't looked at my account. And I won't look at my account tomorrow. So I have no clue what happened today. I jumped in this morning. I did my trades. Great. Everything looked great. Said it, forget it. Now tomorrow morning, I'll look again. Jameson's whiskey. 2 cells on SMCI. Okay. 1 cell on Oracle. 3 cells on Hood. Looking for $8,000 a week. You know what, Jameson? Let's hold you up right there. I'm going to take a look at what he did and see what it looks like. Okay. So 2 SMCI, 1 Oracle, 3 Hood, and you're looking to make $1,000. Okay. Do you check each morning and that's it? Okay. Hugo Lina, absolutely. Okay. I'm sure you get up in the morning. Okay. You brush your teeth every morning. Okay. You shower every day. If you have a dog, cat, or pet, I'm sure you water and feed it every day. If you have kids or a wife, I'm sure you feed them and get them ready to go every day. So why don't you take care of your money every day? How can we join you in the morning when you trade? Okay, Anna, you're on TikTok number 2. My second TikTok channel. It's easy. Just go to the top left corner. Send me a DM with your number. I'll give you a call. We'll chat. I'm just me. Can't I give you 10,000 and you do your trades and we split 50-50? That would be great. Unfortunately, that's not worth my. I don't want to be insulting, but that's not worth my time and effort for doing it. Do you know what I mean? Okay, I haven't seen 10,000 in my account decades. It's not worth the effort that I got to put forth to do it. And then I'm accountable to you, and I have no idea who you are. Okay, so I want to check out Jameson. I want to check out SMCI. But we're still on Mara. Let me finish up Mara first, and then we'll do Jameson. Because that looks like good. A good theory, a good idea. So I want to take a look at what it looks like. All right, so. We like the chart. We like the numbers. Now what I want to do, I want to take a deep dive into the chart. I actually want to see the numbers. Exactly. What is it? And check this. I don't know if some of you guys notice this or not. But ready? Tra-la-la. New shades. Do I look goofy in these? I don't know. Doesn't matter. Anyway. Okay. So let's do this. A year ago, Mara's at 16.8. The high of the year was in the end of November. Okay, fine. November. We bottomed out the second week of April, and that was 981. Okay, so I gotta stop for a second to point this out in case you haven't noticed. The high of the year is $30. That's the high of the year. $30. You can't argue with that. You could, but it'd be pointless. The bottom of the year, again, you can argue, but it'd be pointless. Why bother arguing with something that's facts? Because this has nothing to do with me. Okay, this is factual information. So this is the high right there. Here's the low right there. What I want to point out is the high is $30. The low is 30. That is a 60% drop from the top of the year to the bottom of the year. So my point being, if you are not ready for that kind of a drop, you shouldn't be playing this game. That's it. If you cannot stomach going 30 to all the way down to 9, not panicking, not selling, I'm going to take the lose everything. You know how many people do that? Those are the people that lose. Now I hate to say this, but thank you. Because I'll take that money. I don't mind. I flat out refuse to sell at a loss. I'll give you a perfect example. I bought IBM in issue 285, and then she dropped down to 240. That's a $5 drop. Did I panic and sell? No. A couple of weeks later, actually took about a month or so to go back up over 285 again. Okay, fine. All right, let's go back to Mara. Here's the bottom right there. We're at 220. 2024, the last 30 days. That's the most important part. Here's your last 3 months. Again, high, low. Is it up, down, up? What's going on here? Well, let's zoom into that. The last 30 days. The last 30 days is going to give us a good idea of where do we think it's going next. Where do we think it's going next? Okay. High. Low. What is it? Is it up, down? Now she's going up. Where is she? This is only one to the upside. Here's a bottom here. Now she's going back up again. How far up is it going to go? And do you like this company? That's a good question. So let's do a quick trade on Mara to see what it looks like and see if it makes sense. Because this is the part where you say, does it make sense or does it not? Okay, so let's say hypothetically speaking, you like Mara. You like Mara at this current price. So let's see what a covered call trade looks like. Now remember, simple, safe, predictable, consistent, and no way to lose. Okay, so when I say no way to lose, that means you only lose. You got to really understand this because a lot of people just don't understand it. Okay, you never lose any money until you agree to sell it for less than what paid for it. So I showed you Mara at the high of the was 30, and then the bottom of the was 9. If you agree to sell it at 9, saying, I don't want to lose all my money, 9 is better than losing everything. If you're that kind of a person, you should be playing this game. It's just the way it is. All right. Right. So we're gonna do a 20/50 because remember we said 2024. The closest one's going to be 20/50, paying 71 cents. I'm kind of curious. That got to be at least 3%. At least. All right. So let's get rid of this. Need the glasses again. Let's get rid of this. Let's change this to covered calls. And I want the 20/50, which is right there. And now I'm only going to do one contract, so you know what one is. And once you understand what one is, well, you can think to yourself, all right, if one costs this much, I can get 7. I can get 12. I can get 113. By knowing what one is, and you should at this point in your life, because we're all adults here, you should know off the top of your head what's your mortgage. What's your insurance? How much you paying gas? What is your entertainment? You should have a good grasp at how much you spend every month and how much you can put aside for your retirement. Because whether you agree or not, whether you want to admit it or not, okay, there is no possible way. Hey, KJ, how you doing? What's up on screen? I don't know. Lisa G, hold on one second. So no matter if you want to agree or not, there's no way to hide it. No way to get away from it. Okay. Retirement is coming, whether you like it or not. You agree with it or not. Do you really think that I thought I was going to be 61 at some point? No. I didn't know past 45 when I was young. This is what I wanted for the rest of my life. Because what I thought I got out of school. I was enjoying the service. And I was retired after 20 years with a full pension from the federal government, being in the army. Great. It worked out great. Until I got a nail stuck in my eye. And then they sent me home. Well, now what the hell am I going to do? 61's coming. Okay, whether you like it or not, retirement is coming. So you got to figure out what you're going to do. Okay, Lisa, I'm going to get you in a second. Let's do these and see what we come up with. Okay, so remember where I said simple, safe. Okay. No, who said that? Hey, thank you. Oh, hey. Kuna Matata's in the house. Your residence? Where was I? I get distracted. I do. Squirrel. I do. I have adult ADD, which means I lose focus easily. Shiny objects, and then I'm gone. Anyway, let's get back to where we were. All right. Remember I said simple, safe, but consistent. It's simple. The easiest one is buying a stock. We talked about. The second is a cover. You buy and sell at the exact same time. Buying and selling at the exact same time. Cool beans. Anyway. Safe. Ooh. Yeah. Simple. Safe. Okay. Safe. It is so safe. You can do government sponsored. All right. Yeah. Seriously. There's certain trades you cannot do in an IRA. And it depends on how you hold your IRA. I get that tax question every week. What about taxes? What about the IRA? Whatever. Put in a Roth IRA, traditional IRA, 401k, however you want to do it. Your best bet is to talk to a tax strategist or tax planner to help you figure out how you trade without having to pay tax or pay the least amount of tax. Legally. I'm not telling you to do anything illegal. Just telling you, hey, there are ways to do it. I don't know if you guys like the red man, the orange man. And when Hillary says he doesn't pay taxes. And he said, no, I don't. Because I follow the system. Because the system allows you to not pay taxes if you follow the system. What's wrong with it? Anyway, let's get back to here. Now remember I said simple, safe, predictable. Remember that word predictable? Well, I know exactly what I'm going to make before I even do the trade. Now, you buy the stock. You have to wait for the stock to move down one way or the other. But a covered call, you don't have to wait to know what your profit's going to be. Okay. Here's the order right there in green. Let me read it to you. Buy one covered call of Mera. 100 the weeklies. 17 October 25. That means this option trade expires next Friday. So here's what's going to happen. Tomorrow morning, I'm going to buy the stock, which means I will own it. Okay, one contract, 100 shares. Five contracts, 500 shares. Okay, I buy the contract first thing in the morning. I sell some of the rights to buy it from me, and instantaneously I make profit without the stock even moving at all. Stock doesn't have to move at all to make you profit on a covered call because I'm selling some rights to buy it from me. Okay, now I own the stock. If Friday comes and they don't buy it, guess what? I still own the stocks. And I can do the same next week. I can do it every single week. Remember? Simple, safe, predictable. Okay, I know what I'm making before I even do it. Consistent. I can do it every single week. This week right here. 17 October, that's Friday. 24 October, that's next Friday. 31 October, that's two Fridays away. Think of it this way. Think of it as a vending machine. I'm going to buy a vending machine. I'm going to pay $1,900 for it. And every single week, that vending machine is going to give me some money. Until somebody offers me enough for the vending machine. You can have it. Well, what is that price? That price for me is $20.50. Why? Because I'm paying $20.24. No, I know it's just a few pennies, but it doesn't sound like much, does it? No, it doesn't. That's why it's so easy and so effective. Because 1% of a $20 stock is 20 cents. That's it. I'm only looking to get 20 cents. That's it. But here's the thing. 20 cents, which is 1% of $20. Every single week, 1%. Every single week adds up to over 50% by the end of the year. Now think about it. If you got 100 grand in your account, 50% is 50 grand. You got 50 grand in your account, 50% is 25 grand. Okay? When you're my age, in your 60s, you should have at least six figures. 100,000, 200,000, 300,000, whatever. You should. Hypothetically speaking. Okay? And if you don't, you got to get on the ball to get yourself there. Because no matter what you do, there's no way of escaping it. We're the only species on the planet that's paid to live here. And to the degree in which you want to live, that's what you're going to have to pay every single month until you go on to the next adventure. That's it. All right. So here we go. Buy Mara, 2050. Okay, the market's open. Here's profit right there. Maximum profit. Remember I said I know what I'm going to make before I do the trade. Most people buy stocks and wait for the stock to move. And then you don't know what you're going to get and how long you're going to hold it. Yeah, no, thank you. I'm serious. I'm a lazy trader. I want to buy it. I want to sell it all within 5 minutes. Less than 5 minutes. Okay, I'm buying it for 2024. I'm selling it for 2050. I'm collecting $89 per contract. Each contract is costing $19.61. Well, I know that doesn't mean anything, but let's check the numbers and see what kind of return that is. I gotta take some medicine for my throat. Normally don't do this, but like once a year I lose my voice. I don't want to lose my voice because I do this every day. All right. That being said, let's keep on rolling. So max profit 89. Cost of trade including commissions and fees 1961. So we get the calculator out. Gonna need the glasses for this. Calculator. All right. First thing we want to do, $89 because that's the profit. In order to find out your rate of return, you take the profit, $89. You divide it by cost of trade, commissions and fees, 1961. That gives you your rate of return for one week. Remember, my goal is percent. So let's see what we got here. 89 is the profit. 1961 is the investment. Comes to a grand total of 4.55%. Do you understand what 4.5% means? If 1% a week is 50% a year, 2% a week is 100%. That's doubling your money. Well, 4% is 200% per year. That's doubling your money every 6 months. If you continuously get 4% every single week. I don't get 4% a week. I average about 1.5. I'm okay with that. Now I could make more money if I sat in front of my computer longer, but I have no desire to. Okay, you will at some point get to a point in your life. You know what? I really don't care about the money. Just let me be comfortable. Well, that's where I'm at. I'm comfortable. I could sit in front of the computer, make a lot more money, but I'm no longer motivated by money. I'm motivated by hanging out with my kids. Go down and see my mom, helping her out, hanging out with my grandson. As a matter of fact, we just had a family meeting a while ago before I came here. I got to hang out with my grandson for a little bit. He's 5 years old. Not the greatest conversationalist, but hey. Anyway. So I don't think 4.5% for 1 week is bad. If of course you like now I already own Mara, so it's relevant. But Lisa, let's take a look. Lisa wants to take a look at, and she wants to take a look at Kohl's. Okay. Now I did buy some Kohl's this morning. Only because the numbers look so freaking good. Why not? Now, for those of you that are new here, Kohl's has been one of my most profitable companies. Like it was like Macy's, Ford, U.S. Steel, Kohl's, Nordstrom's. Extremely profitable for us. All right. So let me read it. Hey James, I have a covered call set. Kohl's at 16 from last week. I want to sell another one with the 1550 for this week. Same expiration. They are treated separately. Yes. If you're doing it right, let's pull up Kohl's, because I actually did jump into Kohl's this morning. Well, because the numbers just look. Who knows what it's going to do tomorrow? Kohl's, KSS. Now, as soon as I hit this button, right, just for the fun of it, the 1 year chart's going to show up. See how long it takes you to find those five things. The high, the low, where is it, where it's going. Okay, it shouldn't take that long. Okay. High, low, where is it? What? 4 seconds? Did you actually count? I mean, that's the way it looks. So we're at 1553. So the closest strike price is going to be the 1550. Because it says 1553. 1550 right here. 54 cents. And if you can add pretty quick in your head, that's another 4% trade. Well, let's take a look. Before we do, let's dive deeper into the chart. That looks like a year ago we were at 1945. We jumped up to high of the year at 21.42. Bottom out April at 6. You heard me right. She went from 22 down to 6. Did I panic and sell? No. Why? Because look at all this movement. Up, down. Now I trade on a weekly basis, but I look every single day. So I have a good idea of what the momentum is, what the stock is doing. And it only takes 10 minutes a day. Because however much money you have to decide how many positions you want. Me, I usually do about 5 or 6 positions in each account. So 5 or 6 positions is really not that difficult. So you open up number one. Great. IBM. What did I buy it for? What did I sell? Where's it at now? What does it mean? That takes me less than 30 seconds to figure all that out. Then I have to look at the chart. Well, this takes 4 seconds. High, low, was it? Where is it? Down, up, down. It's really not that difficult. Simple. Right to the point. Then I do the next one. And then the next one. I only have about 6 or 8 in each account. So it takes me less than 15 minutes. Well, less than 10, 5 or 10 minutes to do each account. And if I'm making 1%, 1 hour of my time is 1%. So if I have a $100,000 account, 10 minutes a day, that's an hour a week. 1 hour a week is $1,000 an hour. $100,000 account. 1% of 100,000 is 1,000. 10 minutes a day, 5 times a week, that's 50 minutes. Turn the computer on, turn it off, it's an hour. Fine. 1%, 1 hour, $1,000 an hour. That's how I value my time now. My time is $1,000 an hour. Anyway. So I already did this one because everything looked good this morning. So let's just go through that right there and just go to the last 30 days. And this is the reason why I did it. 13th, right there. All right. Here's the last 30 days. Take a good look and see what I see. 30 days ago, we're here. We shoot up, it drops down. Shoots up, it drops down. What do you think it's going to do now? Now, it's not guaranteed, but look at it. It looks up, down. Next thing should be going up. Doesn't mean it's going to, but it should. But here's the thing. I like Kohl's. I wouldn't mind owning Kohl's at $15.50. So I bought some this morning. Okay, so let's do one. 1550s. Changing this to covered. Okay, the 1550s right there. One contract, so you know what one contract is. Now, I bought more than one contract, and it'd be inappropriate for me to tell you. But here we go. Here's the order. This is what it sounds like. Buy one covered coals. 100, that's the weeklies. 17 October, that's coming Friday. 15.50 is my exit price. Well, I bought it for 15.53. Now I want to sell it at 15.50. Did you hear that? I buy it at 15.53, and I'm selling it at 15.50. Does that make sense? Hold on. Uh-oh. Gotta prove I'm human. Every once in a while, these puzzle pieces, I gotta prove I'm human. There we go. All right. So that being said, the 15 calls against the stock market, blah. Here's the profit, $50 It's a $1,400 trade. It's it. Well, let's find out what the return is. Okay, for that, calculator, 53.50 is the profit. Okay, see right here? Max profit, 53.50. Okay. Cost of trade, commissions and fees, $14.97. So let's do the math and see what kind of return for 1 week I can look forward to getting this week. 53.50 divided by 14.97, grand total of 3.55%. Well, think about it. 3.55% for 1 week. Now here's the thing. I'm going to be watching this all week. And on Thursday or Friday, I will think about rolling it next week. What does that mean? That means I buy back whatever I sold, and I sell next week's, and I get another premium, another commission, another check coming in. So I make 3% this week. Next week I might make another 3. I don't know. We'll find out when Thursday or Friday comes. Okay, because Monday, Tuesday, you do my buying. Okay, Wednesday, Thursday, you just look, see what's happening. Just so I can know what's going on. Okay, if you have a, let's call it a. If you have like a vegetable garden, well, you should go out every day and make sure there's nothing eating your plants. Make sure it's well watered and fed. It's like anything in life. If you keep at it, if you keep looking at it, if you pay attention to it, well, maybe it will work out. And what am I looking for? 3.55% for 1 week. That's what I'm looking for. Great. I do that every single week. Crazy. That's over 100% by the end of the year. I can live with that. I can. All right. Next. Okay. Hopefully that answers your question, Lisa. All right. There we go. All right. So over here, Jameson. Let's look at yours. Jameson, I'm going to write these down and see if you're right. $1,000 for those three positions. We'll find out. Jameson wants to do SMCI, Hood, and Oracle. All right. Now I'm going to make the assumption that you jumped this morning, and we'll just use those numbers there. Okay. First and foremost, SMCI. Now I would never do SMCI. I just don't like it. And hell no, I wouldn't have done it this week. But that's just me. Okay. So he did two. All right. Well, here we go. High, low, what is it? Look at down, up. Now it's coming down. I don't know. Did you look at that, Jameson? Top right there. Now she's down. Well, let's zoom in a little bit closer. I don't know, Jameson. Okay. Your high. You got your low. Where it was. There it is. Look at this. Up, down, up, down. And it's currently at 54.75. Hasn't moved very much. So let's do the 55s, which are going for 170. Interesting. 170. Okay. Well. Now you did three of them. So let's find out. All right, the 55 right there. All right, let's do this. 55. There we go. Now you said you did three. 1, 2, 3. Here we go. Here we go. You ready? All right, Jameson, here we go. by three covered calls SMCI 100. That's the weeklies. 17 October 25. That's this Friday. That's when this option expires. You said you want to do it this week. The $55 call option against SMCI. Look at the profit. 426. He made 426 just one trade. Okay. And he dished out 1675. Okay. So let's check out the math. 426 divided by 16,075 grand total of 2.6%. Cool beans. All right. So 426. I'm writing that down. Okay. Next. It's giving me an upset stomach that thing. All right. Next was Oracle. He did one Oracle. ORCL. Interesting. High, low. Was it? Is it? Okay. Up, down. She's going up. That looks good. All right. This morning. What'd she open up at this morning? 298. So more than likely 300. That's going to be kind of tough to judge that one because holy cow. All right, so 308. All right, well let's just do it at 308 because numbers are what they are. Last 30 days. Here we go. That one looks pretty good. Look at this. Okay, where we are right here. Shoots up, back, up, down, right here. Nice position right there. Here's the bottom here. 1, 2, 3, 4. 4 days to the outside. Well, that looks pretty damn good. I'm going to write that one down. ORCL. All right. So ORCL. All right. So the 308. So we're going to look at the 307.50. That's the closest. All right. Covered call 307.50 right there. And let's do. He just wanted one. Okay, so just one. Mark it. Here we go. And here we have it. Holy Nike! Jameson, see that number? 1,032 just for that one position. 1,032. So put that one down. What was it? 1,032. Okay. And what did it cost you? Cost you 29,718. All right. All right. Calculator. Here we go. 1,032 divided by 29,718 comes a grand total of 3.4. That's freaking awesome, dude. All right. Last but not least, look at number three. He did. Oh, wait a second. He did two on SMCI. I wrote it down for 3. Damn it. All right. So 3 on Hood. I gotta change this for a second. I did the wrong number on. Which was that? SMCI. SMCI. All right. We said the 55 right there. Just two of them. I'm gonna double check my numbers. Two. Okay, right there, and 290. All right, so I was incorrect. So he walked away 290 from SMCI. 290. Okay. It's okay because he just did Oracle. That really put him up over. All right, next. Hood. 3. All right, let's do 3 on Hood. Hood. H-O-O-D. Hell no, I wouldn't have done these either. But hey, that's okay. Now the reason why I say I wouldn't do it, I don't buy anything at the high. Look at that. Your bottom's here. $30. Shoots up to 150. So 30 to 150. Of course there's going to be profit taken. All right. Okay. High, low. Was it? Down, up. That's it. Let's find out. Last 30 days. Right there. All right. So not quite sure I agree with you, Jameson, but look, 30 days ago, here we are right here. 30-day bottom. Shoots up, pulls back. Shoots up, pulls back. That's what it looks like. It goes from here, 115 to 155. That's $40. $40 on a 115. That's 20%, something like that. That's a big jump. Here to here. 24%. Yeah. Profit take. You know what that means? That means this big drop. Well, let's find out what you did. It's at 168. So the 141 is going to go for $395. And you did three of them. Nice. Let's find out. Okay, let's get rid of this. Let's change this. Coverage dark. The 141s right there. They are the closest. Okay. 141.15. Look at this. 140.68. Closest would be 141 right there. Well, let's find out. Okay, just three of them. Okay. Market. Here we go. Here's Johnny. Okay. By one. No, wait a minute. No. He said three. Holy cow. All right, let's edit. He did say three. Okay. Confirm and send. That looks holy shit. You only want $1,000. Your math is all wrong. By three, covered calls Hood. H-O-O-D. 17 October. That's this Friday. The 141 call option again at the market. Your profit on three is $1,260. Now you dished out 41 grand. So let's see what your rate of return is. Calculator. 1,260 divided by $41,040 gives me a grand total of 3.007%. So you did trade. Each one got over 3%. And this one got 1260. Let's do that quick little math. 1260, 1433, and 290. Okay. That's 399 is 18. All right, 355 and 3. That's 799. 2983, dude. 2,983 for those positions. You're looking for a $1,000 a week. No. Okay, clear. Your first trade. Okay. Was 390. No, wait a minute. It was 290. Okay, so 290. The second trade was 1433. Plus 1433, and then 1433, and the one we just did now was 1260. There you go, dude. 2983. Not 1,000. That's 2983. If you did it right. Okay, now. Two of those I wouldn't have done. But that's okay. You don't buy things easy, nothing ventured, nothing gained, right? All right. So that's those. All right, let's keep on. So Jameson looked pretty good. Do you check next morning? Yes, I do. How can we join? It's just okay, we said that. No. Will Trump manipulate the market for his cronies? Brandon, I don't see why you dislike the man. Okay, is he doing what he was hired to do? He was hired to do a specific job. Is he doing it or is he not? I'm out looking for another master trader. All righty. Do you sell any products? Of course I do. Santiago, I'm not going to try to sell anything. Okay, now everything I sell in the bio. Go to the bio, go there. I promise I don't try to sell anything on my nightly show. I don't. I'm just here to share information. We're all adults. We know how it works. You want to buy something? Go to the store and buy something there. I've written 14 books. I got study course. I got all that kind of crap. I'm not trying to sell you anything. Okay, if you want to do anything more, then go to the store and buy it. You know, I'm just here to learn. All right. Let's keep on going. Yes, Chris, I do. I'm well aware of thank you. So what are you doing if it drops? Doesn't pay a dividend? Absolutely, Chris. That's why I like dividend stocks only. Now, the gentleman over here, his name. Terrible. I was just talking 2 seconds. I forget his name already. I only do dividends personally because that way if the stock drops, I'm getting the dividends, and I'm still writing covered calls as it does drop. Thomas, BMNR. Now, why does that sound familiar? BMNR. Didn't we look at that one a while ago? BMNR. Hell no. Thomas, weren't you listening? Jarf. Okay, Jarf. What delta do I look for? Okay, Jarf. You missed the point where this was explained for a 9-year-old. Okay, nothing at all to do with the Greeks. Okay, you want to talk about Greeks? We'll tell them about the Fibonacci trace. What about the MACD? What about the RSI? Okay, there's a lot of stuff I could tell my 9-year-old, but no, I don't. It either makes sense or it doesn't. Daisy wants to take a look at WWR. Hell no. Okay, weren't you listening? I don't do stocks that are a buck. No. I don't do stocks that are monthly options. No. KB, thank you very much. Other shades are better. Yeah, I think so too. I mean, the prescription lenses are only $12. Why not? I can go for an extra pair. It's always nice to have an extra pair. You never know when you're going to need them. All right. Easy money froze. Okay. Now, I don't know why you say is he going to manipulate the market for his cronies? It doesn't work that way. Tommy, yes. Antonio, how you doing? Hello. How's it going? Foo. Absolutely lovely. Bone. Nickel picker. Back again. Take a look at BYD. If you could cash your put. I've never heard of this company, and I'm always hesitant when somebody asks me to take a look at something I've never seen before. BYD. Hell no. It's going for $1. What makes you think, Nickel? What makes you think this company has 20 years of profits? 20 years of profit. Why buy something that's not profitable? No, I'm not going to bother. Thank you. Oh, Soundhound. Jake wants to look at Soundhound. SOUN. Okay, Jake, explain to me, if you will, if the company is like $3 last year. Now it's 19. Does this thing have 20 years of profits? No, it does not. So no. All right. How do you start investing? It's just simple. You pick up a phone, or you go on the computer, you sign up, and do some learning. Okay, go to YouTube. How do I start investing? Well, number one, you have to make up your mind first. It's a new psychology. You think differently. It's a new language. You're going to learn stuff you've never heard of before. And you have to get used to that. Bear in a foxhole told you fellas. I don't know. What did he tell us? I have no idea what he's saying. Jay, if you're selling euros against GBP, I'm not even doing that. Okay, What are you using to stream online separate channels? OBS. Do you hold any Bitcoin? No, why would I? ULTY looks like a rock falling off a cliff. Yeah. Well, also take a look at how consistently profitable are they? How were they last year? Before 10 years ago? Wait a minute, we're here 10 years ago. Yeah. No, I don't like ULTY. Hasn't been around long enough. And the numbers don't even look that good. All right, let's keep on going. If you were making 1% a week for 15 plus years, why aren't you worth over 55 million by now? Dumb man. Thank you very much. I always love it when people tell me how to live my life and how to spend my money. You're under the impression that my money doubled every 2 years, 50% a year. Well, you doubling. Well, what about my living expenses? And however much money you think I have, I don't. That 50% I make a year, I use that to pay my bills. Okay. So you can take whatever money you got, spend it however you like. And eventually it will be gone unless you have a way to multiply it. Great. So I have a way to multiply it. Wonderful. It multiplies 50% a year. Well, that 50% a year that covers my, takes care of my kids, my mortgages, my insurance, my car, all that kind of stuff, and the traveling I like to do. Where do you think now? I love it when people tell me how I should spend my money. I do. That's a serious question. Why aren't you worth 50 million? Because I don't want to be worth 50 million. Okay. And where do you think I started? What do you actually think I started with? Okay, 30 some years ago, I started with $12,000. And you know what 50% of $12,000 is? It's $6,000. And if you live here in Florida and the rent is $1,400 a month, well, $1,400 a month multiplied by 12, that $12,000, that $6,000 doesn't cover that. So where did the rest of the money go? So don't start telling me what I should do, what I shouldn't be worth. I'm perfectly comfortable right where I am. WWR really was a no. Other shades were better, thank you. Melanie, thank you. Tennis. Clock. I have no idea what clock it means. DTN. Invest money you're not happy to lose. Okay, don't invest money you're not happy to lose. Okay. Tennis. Fine. I'm going to disagree with you because all the money I have. See, Mike. My trading account has a credit card and a checking account attached to it. So I make my money on Mondays and Tuesdays. But then I pay my bill. Can we look at BX? Antoine, give me a second. Look at a little bit. UAMY. What the hell is that? UAMY. We already looked at that. That was a no earlier. And it's still a no. Anything that was a dollar last year, possibly. It can be worth. Possibly it can have 20 years of profits. And if you do have 20 years of profits on a $1 stock, yeah. Next. Jay, you plainly ignoring it. What am I ignoring, Jay? Metaman wants to take a look at British Petroleum. Interesting. I'm going to say no to British Petroleum this week. Here's the reason why. Here's the reason why. Here's the high. She dropped back down. So she only has one day right here. Okay, here's the bottom right there. 30-day bottom. 30-day high, 30-day bottom. Now she's going up. Great. One day. So BP, I'll put down later on. Like next week. But not this week. Okay, what else do we have? Jan, Ryan, Ramia. Good evening. Holy cow, 99 messages here. Jeff Mattingly, how are you doing? Solomon the dropout investor. If you didn't want that, don't get into trade. Oh, thank you there, tennis. Time traveler. How are you? Camo. Thank you for sharing your knowledge. Thank you. You're welcome. The voice of wisdom. Woo-hoo. Can you please look at WWR? What the heck is WWR? WWR. West water. Hell no. Cause see. Who came up with that one? Daisy. Take a look at this thing. 40 cents last December. How can this thing possibly have 20 years of profits? 20 years of profits. That's one. And then October, November, February, May. Those are months. Okay, there's only 12 months in a year, which means if I'm making 1 to 2% with each trade, multiply that by 12. That's 12 to 20% a year. Why the hell would I want 12 to 20% a year when I can do it once a week? 1% per trade. That's 50 to 100% per year. So why the hell? Nope, I don't do monthlies. The numbers are horrible. I tell you. Dennis retirement at 61. No, I retired at 59 2 years ago. All right, bust up the chair because there's a lot of questions here. Bust up the chair and get comfortable. All right. Thank you, Dennis. And we still have 99 questions. The voice of wisdom. Please check my question. My question. I don't see a question here, my voice of wisdom. How far back do you want me to go? I don't see one. Sorry, dude. I just don't see one. Okay, retirement 61. Please question. Thank you. What if the stock tanks? How do you recover? I always love that question because not a single stock I've ever seen didn't tank at one point or another. They all do. They go up. They go down. That's it. That's all they do. WHR is that WHR? WHR is that a monthly? It is a month. So who came up with that? Gertie Pnat. Okay. Don't like having to be forced to own 100 shares. Strategy. Okay. Thank you for your input. What other questions? Thank you. Okay. Got that one. Okay, JWH doesn't like doing covers, so why are you here? Please check the answer to my question. Voice of wisdom. I scrolled back and I couldn't find any questions you had. Okay, sorry. Now don't stock drop after dividends paid. Brand, you're absolutely 100% correct. Whoever said I was looking to get the dividend. I'm not looking for the dividend. I'm looking to get out before the dividends paid. There is no way to make 52% a year. Made in Cali. How are you today? I just love negative people. I do. Now. Yes, I do. Yes, I do. For Cali because he's having issues. All right. Where was it? Cali just disappeared. Oh, right there. Made in Cali. There is no way 52% a year would own half the world. Why does everybody automatically assume because you make 50% a year, you're automatically going to be a dick? Okay, why would you assume that? Okay, so do you see what it says here? Weekly trades 2025. Now I'm going to go all the way back to the beginning of the year just to satisfy your curiosity. Okay. 19, 18, 17, 16, 17, 16, 14, 8, 7, 6, 5, 4, 3. Okay, so made in Cali. Just for you. Are you ready for this? Get my chair out of the way. Cheers. Okay. All right. So made in Cali cannot do 52% a year. Okay. See right here. This is account number one. This is account number two. This is account number three. Okay. Account number three. The start of the year. The beginning of the year. 114,000. This number right there. Okay. Account number two. 143. Okay. It's account number two. Okay. 2, 3, 1. Account number one. 152. There's 152 in here. Okay. Now, let's click on one of these little red tabs. One of those little red tabs is every single trade for that week. Timestamp right here. Okay. 1/2/25. That's January 2nd, 2025. 1/3/25. That's January 3rd, 2025. Okay. That's the timestamp. This is what the trading chart is. How many contracts? This is the stock. Walgreens, Riley, U.S. Steel, Foot Locker, CVS, Riley, Halliburton, Riot. Okay. Here's the call options. This is the profits right there. You want to add them up? Let's go real quick. Look at this. 50 contracts at 12 cents. That's $600. That one trade right there, $600. You can add them all up if you like. Just to save you the time. Okay, all those trades right here to a grand total of 4,839. If you do some simple math, Mr. California, that's 4.23%. That's week number one, account number three. Week number one, account number two, right here. 2,634, 1.82%. In case you're wondering. And then account number one, right here, 9,341 for 1 week. That my friend, is 6.19%. Now we can do this all night long. But week one, quarter one, December 30th, January 3rd. Week number two, January 6th to January 10th. Account 3, 1.89. Account 2, 1.72. Account 1, 2.33. Okay, week number 3, January 13th to January 17th. 1.87. Account 3, account 2, 3.65. Account 1, 4.87. Now I can do this all day long and show you each and every single one of these. Now as of this year so far, I get over 1,500 trades and I've lost 4 times. Okay, let's click just for the fun of it, right here. Okay, what do we got? Advanced Auto Parts, Macy's, U.S. Steel, Delta Airlines, Alcoa. Halliburton, Foot Locker, Advanced Auto Parts, Riot, U.S. Steel. Where are we? Week number 15, second, April 7th, April 11th. 1.86, 3.36, 2.76. I just love that you can't do something before they even look at the data. Before you even look at the facts. You don't have to believe. I really don't care. Really, I don't. But those are the numbers. I like them. Ain't my problem. But I do make over 1% every single week. Not really. I think 3 or 4 weeks I missed 1%. I think I got 0.9 1 week, 0.8 another week. Big deal. All right. So anyway. Whatever. Demand. Do you have the list of 300 stocks to meet your criteria so we can research beforehand? Absolutely. Are you ready? List number one. Dividend Kings. 54 companies that increased their profits for 5 decades. List number two. Dividend Aristocrats. 67 companies that increased their profits for 25 years. List number three. Dividend Champions. 150 companies that have consistently increased their profits for 25 years. Yeah, I know. The Dividend King. The Dividend Aristocrats and Dividend Champions. Yeah, but here's the thing. The Aristocrats, they're pretty picky. Yeah, so some of the champions, even though they have 25 years, they don't make that list. It has something to do with the market cap and shares and something like that. List number 4. Dividend tenders. 10 to 24 years of dividend increases consistently. There's over 300 of them. And then just for the fun of it, we're going to look at Warren Buffett's list. You know, because we all know who Warren Buffett is. And I don't know if Warren Buffett's picks have dividends. I don't know. But anyway, good enough for Warren. So there's your five lists. That'll give you over 300 that are consistently profitable. There you go. Is tech market in correction territory? I have no idea what that means. I don't know. I take all the stocks that I like and I put them together by calendar when they actually pay their dividend. Because that's what I'm looking for. I'm looking for the run up into the dividend just before the EX date. Now, doesn't stock drop after dividend brain? Yeah, they do. How many years left? How many years left? I like to think at least 35. So I'm 61 now, 35 years, that would be making 96. The man, example, aristocrat stocks. How many years left? Okay. Get well soon. Thank you, Dev. Always buy Mara. Okay, got that one. Bam. You already talk about NBIS. What the heck is NBIS? I have no idea. NBIS. Nebius Group. Why is it I've never heard of this company? Well, let's check it out. Well, before we do that, I want to go to Yahoo Finance and see how many years has this thing increased profits. Yahoo Finance. Now, if you're going to be a serious investor, you really do need to have access to some financial website to give you detailed information that you can't get from your trading platform. Your trading platforms don't have everything. Okay, so I want to look at historical data. Wait for it to open up. Okay. NBIS. Now, what I'm looking at for NBIS, here it is right here. Nubius Group, here it is right here. NBIS, it's $135. Okay, fine. What I'm looking for is this right here. Historical prices. Now, I don't want to look at the prices. I want to look at the dividends. Because if a dividend is a portion of the company's profits, I want to see how often this thing has increased its profitability. Well, gander at this. There are no dividends in the selected time period. So my question would be, why would you show up to a dividend invest platform or show, whatever you want to call it? Okay, the name is stock dividend. The word dividend is right in the title. So why would you come here and ask about a stock that doesn't have any dividend? That makes no sense. And that's why I've never heard of NBIS. Because if the stock drops, what am I getting? I'm getting nothing. At least with a dividend stock company, specifically one that increases its profits every. If the stock drops, well, at least I'm getting a higher dividend every year. Think about it. Coca-Cola's been in business for 140 years. They've been on a dividend kings list for decades. If they miss one dividend payment or reduce that payment, they get kicked off that list. Oh, I'm sure they pretty much don't care because what's another 50 years to a company that's 140 years old? Think about it. If you miss a dividend payment, if you decrease your payment, you get kicked off that list. Now, it probably doesn't mean anything to you. But for people like me who rely on companies that are consistently profitable, for the income that we need to live comfortable, because we know we can't rely on the government, Social Security. I saw what my Social Security checks look like. I'll be lucky if that thing pays my electric bill and my phone bill. That's it. Where's the rest of the money going to come from? It's going to come from my investments. And that's something I have to do. Because whether you agree, whether you like it or not, there is no choice. You either do it yourself, take accountability of your own learn, or give it to someone else to do for you. That's absolutely nothing wrong with that. There are a lot of people out there willing to trade your money for you, invest your money for you, as long as they get a slice of pie. Well, Well, I'm no different. I get a slice of the pie from a bunch of people. Because they want me to trade that money. Great. I don't have a problem with it. I'm limited. I'm limited. I'm a little picky what I can do. All right. So that being said, NBIS, no. No dividend. Why would I look at a stock that has no dividends? For me personally. But anyway, he likes it. So whatever the reason. But here's the thing. I would never buy it high of the year. It just doesn't make any sense. Just think about it. You make most of the stock market buying low, selling high. Not buying high and then waiting for it to go high. That doesn't make any sense. Brand, but stock money. How are you today? Martin Flannery. How are you doing? Robbie Love. Pacific Bio Science. All right. Alicio. You got to tell me what symbol is. I've never heard of that company. And low key. What's Mirror? I have no idea what that is. American Anatomy. We already looked at that. Hell no. Autonomy and payment and whatever. No. Can you spell the stock symbol for US? Reborn. USAR. What the hell is that? USAR. Oh, USA Rare Earth. This is the part where I say hell no. Because they don't have dividends either. Let's keep on. What do we got? Hansen, how are you today? Obnoxious. All right, yeah. All right, Sam, Abney, Kevin, what's going on? Ann, how are you doing, Ann? Foo, what's the stock? Sorry, you're late. That's AT&T. Ooh,